Hey, good morning, everyone. What's up? I hope everyone is doing well. Happy Tuesday, start of the week here. It's a shorter trading week. We only have 4 trading days this week as we had Memorial Day yesterday. So hope everyone had a good long weekend. Spend some time with their family, so on and so forth. So today, I do want to start off by talking to you guys about something that's coming up. We do have that free futures trading course and workshop, how to trade any market condition, that's coming out. We're going to start on Wednesday, May 31st at 2 p.m. Eastern time. So there's a link in the bio. Go check that out. These are going to be recorded sessions as well. But I do hope to see you all there live, as I'm going to be sharing a lot with you guys. And it's going to be a good back and forth environment, a very good learning environment. And it's going to span Wednesday, Thursday, Friday, Saturday, and Sunday. So the weekend, I'll be doing it on the weekend as well. To wrap that up 5 days straight. So I hope to see everyone there. I'm going to be sharing with you guys a lot of knowledge that I've learned from desk traders, other professional traders, that has helped me a lot with my trading. And we put a lot of time and effort into this. So I hope to see everyone there and active and participate. Now let's start with what we have this week. We have the continued bull side in the overall market. We had some good news from the debt ceiling talks between Biden and McCarthy coming into agreement with some kind of deal. Now, I'm not going to pretend to be some kind of politician or pretend to know what the hell is going on with the debt ceiling and how it's naturally supposed to affect the markets. But as we've seen a constant bid in the markets, and we have moved into a distribution block to the upside, meaning that we should hold that area realistically. The deal theoretically is good news, but there were some Republicans that came out on the weekend that said, hey, we're just going to slap that deal away and not going to conform with that, right? So we're going to see what happens with that vote. The deadline was pushed back by Janet Yellen, Treasury Secretary, until June 5th, which happens to be the coming Monday. So we'll see how that does shape out realistically. So with that being said, we do have some more upside in the overall market. Big tech is rallying continuously. And is this a bear market rally, or are we into something very, very different, right? A lot of sector rotation has happened into big tech from the start of the year, and it's sustaining. Now, this week, we do have some news coming out. Non-farm payrolls are coming out on Friday pre-market. That's something that we're going to be trading live with our room. Another thing is there's some like smaller news, but let's talk about what's going on here. So we're realistically probably going to see tape bombs coming out from the debt ceiling talks this week, right? House Speaker McCarthy inked a deal on the debt limit with Biden. Both sides have now to muster enough votes to win congressional approval, despite some opposition from the likes of the Republican Freedom Caucus and progressives in the Democratic Party. While enough bipartisan support is expected to eventually be garnered, the measure could still run into some obstacles, rather, which realistically we are running out of time. Again, the deadline is June 5th, which could result in a default realistically. There's one other time that we've kind of tiptoed on the wire, which was in 2011. We saw a very substantial downside in the S&P, spanning about 15% downside in just about a week's time. So things can get very dicey should something be concretely confirmed or denied. So in terms of legislative text, the agreement lifts the current $31.4 trillion US debt ceiling into 2025, meaning the limit on government borrowing would be extended until after the next presidential election, and non-defense spending will be capped at current levels for the next fiscal year and only raise 1% in 2025. So Congress would also need to approve 12 annual spending bills or risk facing a snapback of spending limits from the previous year. So other changes that were central to the compromise included limiting the food stamp provisions to encourage recipients to find jobs. The agreement also halts some of the funds to hire new IRS, clawing back millions of dollars in unspent COVID relief, and would speed up big energy projects through permitting reform. So in addition, a pause on student loan repayments will come to an end in August. So we'll see how that kind of shapes up. So it all comes down to, is there going to be a deal or isn't there going to be a deal? Just putting some pen on paper resulted in a 20-point rally in the S&P. We gapped higher to start the week on Sunday and then held that key support structure. We're going to talk about those distributions, obviously. But one of the main things that's been shaking up the market is big tech, right? Big tech is on a continuous rally, and NVIDIA is wild, right? NVIDIA is crazy. After earnings, it skyrocketed like 20 something percent. Right now, this massive rally, we're trading above $400 per share on NVIDIA. The last time I remember NVIDIA being at such a price was pre-split, as we rotated aggressively for months at a time before rallying into $800. So it's up another 3.5% pre-market here, right? It's at $1 trillion market cap. It's finally joined the club with the likes of Microsoft, Apple, right? So on and so forth. So it also puts the company at a very interesting position, right? A lot of people might be FOMOing, or the fear of missing out, getting into the rally and opening those longs as this thing is continuously kind of pressing these highs. Yes, there was a massive gap in earnings, but I don't think necessarily that this is a stock to short. I don't think big tech is an area to short just yet. You would want to see convincing reversal in the structure, in maybe even in the macro sphere, right? You have to see some kind of decisive factor to call for a pullback in these assets. And I don't think that's necessarily the case. So a lot of people are probably going to be buying in, which could spurt the next little rally. But a lot of people are going to be shorting this thing, which is most definitely going to spurt the next little rally. So and Chipmaker has responded in kind by refreshing its PR feed, publishing 7 separate press releases over the last 24 hours. In terms of the massive wave of AI. Among them were a slew of products and services tied to artificial intelligence, like the AI supercomputer platform called DGX GH200, that's expected to be used initially by customers like Google, Meta, Microsoft, and so on. So there's still decent potential that this rally does continue in NVIDIA. So that's something that we do have to take a look at. Spy calls using my wife's boyfriend savings. Honestly, like the way that this market's rallying right now, I'll give you guys some levels on the S&P 500 futures, right? You can take those and adapt them to other assets. But right now, as it stands, let me just get rid of some of this. Right now, as it stands, let me move one of these lines. We have a key area. The top of the prior distribute, or I should say the start of a new distribution to the upside, is 4220, 0 to 23. So 20 to 23 is the top, or the bottom end of a distribution star. And the top end of that area is 4248, 4250. So you got to keep those areas in mind. Right now, we've held that 2023 extremely well over the last overnight session, right? Just continuous hold, and we've eventually seen a rally here pre-market that traded all the way up into the 43s. So very, very close to the top end of that distribution block. There is another key level that I would like to see hold. As if you want to stay bullish on today's market, you need to hold 20 to 23 on the S&P 500 futures. That is the last chance. Otherwise, we enter into the distribution block to the downside, and we just aggressively move back into where volume is. So as it stands right now, we're holding out for a buy stop run for all of those shorts that accumulated at that area. The top target being 4248, which is very, very close. Above that, I'm going to be watching the 60. If you can accept above the 60 today, I think there's a very high probability that we can run into 4300 by the end of the week. The first decent area to pull back, first key support, is 32 on the S&P 500 futures. So that's all I have today. I want to leave you guys with that. I want to, again, remind you that on Wednesday, May 31st, we do have our live stream of day one of our futures trading workshop slash course, call it what you will. But I want to show you guys how you can use these tools that we've been using all year to trade markets in any market condition, regardless of the volatility, regardless of the direction. You can find all of those things with higher confidence and higher probability in the markets. So I hope to see you guys there. Again, this is absolutely free. I hope everyone takes advantage of that and comes and chats with me there, because I'm going to be doing Q&As naturally at the ends. And with that being said, have a happy Tuesday. We'll see you guys tomorrow, and check out our trading room, community.tradeproacademy.com, and chat soon.